Joined by Osama Rizvi, economic and energy analyst in Lahore. Welcome back to the programme, Osama. Now, these tariff threats are back and markets seem to be taking them seriously. Are investors already positioning for a prolonged trade shock?
Well, indeed, the start of 2026 has already been quite an aggressive one when considered from a geopolitical landscape. The recent tariff war only adds to the current tariff war the US has with China. Now, one country is doing two trade wars with China and European Union, both the largest markets in the world, huge population sizes, huge potential markets, and it is only going to do a disservice to the long-term goals of the US and the current administration in the fact that it has the possibility of bringing European Union and China together much more than they actually thought they would. Similarly to the fact, we also saw Canadian Prime Minister visiting China, Beijing, 2, 3 days ago, and this speaks about this change, a shift in the new world order, even in terms of the trading patterns.
Right, and gold and silver are also at fresh highs. Does that signal fear, or is this also about expectations of looser US policy?
Well, there are multiple reasons behind this. First, there has been already a momentum behind silver and gold because a geopolitical upheaval has been sort of become a salient feature of the global world order from 2025 to 2026. Secondly, there is also fears regarding rising debt in the US. There was a government shutdown, so the confidence therein has decreased. Therefore, the other safe havens, which used only to be the gold, but now it's silver as well. Silver has fundamental reasons to go up as well because historically from the previous 4 or 5 years the production has been in deficit, so there are multiple reasons, but of course the US monetary policy, the US confidence in the economy are one of them.
And oil prices are flat despite geopolitical tensions. So does that reflect confidence in supply or rising fears about demand destruction?
Well, you need to look at it from two angles. Fundamentally, there is a very strong realization and acceptance of the fact that the global oil supplies are enough, sufficient, if not oversupplied. We are expecting further 400 to 500,000 barrels per day oil and water exports coming from non-OPEC producers such as Brazil, which also increased their exports by 25% in the recent few months. Secondly, we're also seeing lots of upheaval in the geopolitics. However, it has not affected the oil infrastructure directly. And the market participants have become cognizant of this fact. So until and unless we see something directly impacting the supply of oil, if until there is a disruption, we won't see oil pricing rising much.
Osama Rizvi in Lahore, thank you very much for your analysis.